other aspect would be that the way to play themes, because the erstwhile regime of, I mean, until 2020 it was buy at any price, and that got rewarded because growth at any price was getting rewarded. We suddenly hit a period wherein there was a mix and a flux happening between both of these. Is there a change in regime currently? Because the last 1 month we've seen companies which were priced to perfection on the narrative getting punished viciously when the first sight of numbers not up to the mark started coming in. Is there a change in regime, or is this temporary? As we hit the new Samvat, I think that will be very important.
Okay, let me take a slightly step back. So first, as you said, the average investor in India is now under 40. 69% are under 40, but majority are under 32. The real route to wealth is for all these guys to go and build businesses, not just make money in the market, and certainly not be doing FNO and SME exchange and all. So if you have one takeaway, for years I've been saying, go and build a business. 90% of India's GDP lies ahead of you in the next 20 years. That is the source of wealth creation, when you have large chunks holdings in companies which do well. If you can't do that, whatever you're doing in your life, in your career, don't then waste time trying to pick stocks unless you want to devote time to it full time. Be happy with the average market return. And I hate to say this to the wealth management industry, people only need 2 index funds in their portfolio, one Nifty fund and one small or mid cap fund, and one fixed income fund, good enough. That's part one. Part two of where you're heading from here, if you indeed want to look ahead at different themes and different formats and so on, again, you can do thematic funds, but it should be in a proper mix and asset allocation. So again, just basic lessons. Let's get our asset allocation right, which may be, if you're 30 years old, 70% can be equity, 30% will be, some sort of fixed income for stability and for giving you cash in periods of drawdowns like we're likely to see. Secondly, within that, you do your large cap, small cap type of mix, which again gives you resilience in times of difficulty, because people haven't seen a drawdown in the last 8 years. Number 3 is your position sizing, because we've made so much money on small and mid caps. When you look back, you realize, hey, this stock, which was a 5% holding, has become 20% of the portfolio, and that should be right-sized as well. So once you've got all that in place, only then we should then start having the next discussion about resetting your expectations, because what's happened in the last 4 years is not going to repeat this year. If we make double-digit return in this coming Samvat, I think we should be happy. Tread some water for a while, let the earnings catch up. And this regime change, remember, markets go through cycles. What were the leaders of this bull market? If you take it from 2020, 21, they were the people who blew up in 2008. Capital goods, real estate, PSUs. They went to sleep for 14 years and then they came back with a vengeance. And the stocks which did well, like you say, buy quality or great businesses at any price, which was in the erstwhile era, you would talk of, the Nestle's and the Page Industries at one end, and the HDFC banks, Kotaks, Bajaj Finance at the other end. They became the laggards, because by now it was cap goods, PSUs and others which were running. And it was the banks which had not performed in the last cycle, which were PSU banks and ICICI Bank, which went from being a laggard to the leader bank. And as that cycle now plays back and people realize earnings have caught up, they've gone back to the defensive businesses, which are IT, pharma, FMCG. The valuations are not necessarily defensive, but that's where they've gone to hide. But I suspect why you're now seeing this renewed vigor coming back to the HDFCs and Bajajes and all of the world is that cycle starts turning again. And this is like I said, a market which goes through its various waves. As long as you stick to what you know and you play through the cycle, you are going to make the earnings of the company. And if you started on a low base of multiples, your asymmetrical bet, what I love saying, that you buy a rupee of earnings for 50 cents. What was happening in the last 3 years, I was being advised by youngsters that, uncle, as long as the earning is growing 150%, how does it matter if you're buying a 100p stock? And it's when that 150p faces a earnings which is not 100, even if it is 75, that's when you see 20% stock declines and there's no buyer on the other side. So those lessons only time can teach you. I don't think, we can sit and pontificate as much as we want here. But it's very exciting when stocks are going up 400% in a year, and you think this old guy was telling you all kinds of, defensive asymmetrical investing is kind of passé. And that explains why Warren Buffett's longevity has been there, right? The man is sitting on $270 billion of cash. It tells you what his worldview is.
Yeah,
Let me pause.
I would have loved to be the fly on the wall when the person or the kid or a set of kids were told Manish ke uncle, आपको investing नहीं आता है, हम बताते हैं कैसे होता है.
New age.